This is David Bush, and I'm your moderator and presenter today for this exciting webinar presentation on how to find and fund Fannie Mae HARP loans. Now, we're excited to get this presentation kicked off, but I want to let you know that we want to have your questions submitted using the GoToWebinar control panel. If you're on the webinar and you've navigated away from your screen, come on back and shoot us over your biggest and most important questions about finding and funding Fannie Mae HARP loans. We know that this is still a hot topic. There's still a tremendous amount of business opportunity out there, and we want to make this an interactive session. I've got three panelists with me that are extraordinary experts on the topic of finding and funding Fannie Mae home loans, and this is your opportunity to get the insider information. These individuals are going to share from their vast expertise of direct mail marketing and home mortgages on how to end up accelerating your success in finding and funding Fannie Mae HARP loans. So our presentation objectives are very simple. We want to talk about how to identify and market the Fannie Mae on mortgages. We're going to talk about marketing best strategies, best practices, return on investment for marketing strategies, and then we're going to talk about the best strategies to get loans funded for HARP loans. We're going to talk about how to qualify loans, the little tactics you can use to get some of the harder deals through, and this is going to be an exciting presentation, so we're going to ask you for your full attention and the opportunity to interact with our panelists. Our first panelist is Michael Robinson. Michael is the Division President for Everfirst Home Loans. He's got over 27 years in the mortgage industry, and this guy's got extensive experience in retail origination. As loan officer, brokers, mortgage bankers, Michael has done it all, and he's succeeded at them all. And now he's got a vast array of experience in wholesale lending in the secondary market, and it's just an absolute honor and pleasure to have Michael on the line with us. Michael, are you there?
I'm here. It's a pleasure to be here.
Awesome. We're so excited to have you here. And we've also got your wonderful brother, Rick Robinson, who's the Division Sales Director at Everfirst Home Loans, and he's got over 22 years in the business. But he's kind of an anomaly. Rick is a former DE underwriter who's got extensive experience in the sales area. I mean, this is crazy, Rick. You've got the experience of an underwriter, but you understand the salesperson persona and the challenges they have to deal with in terms of originating home mortgages. And so we're just excited to be able to have your expertise on the call as well. Welcome.
Thank you very much.
So we've also got a guy by the name of Jeff Bush, and Jeff has been doing direct mail for the last 18 years, and he's actually mailed over 1 billion pieces of direct mail for the mortgage industry. Some of the top 10 mortgage industry leaders have utilized Jeff and his marketing expertise. He's called the mortgage marketing mastermind because he ends up bringing all the very best strategies from the very biggest players to even the small guerrilla marketers that are out there that are trying to attract new opportunities in a very safe and legal manner. He actually owned a mortgage banking company that closed over 5,000 loans and $1.7 billion from 2000 to 2007. So he's another anomaly where he not only has vast marketing experience, but he's also got the hands-on mortgage banking and origination experience. Jeff, are you there?
Yeah, I'm here. Thanks for having me, Dave.
Well, we're excited to dive into the presentation. We've got questions that are being submitted right now in the GoToWebinar control panel, and I'll ask those in the order in which they're received. And if you don't get your question answered during this presentation, we're going to follow up with everybody to make sure that they understand in terms of what their questions were and how to get that answered, because we want this to be a knowledgeable opportunity for you to invest an hour with us. We're going to start off the presentation with Jeff, just because of his marketing expertise and his mortgage banking background. We're going to talk to him about how he's successfully marketing and attracting Fannie Mae-owned HARP mortgage candidates to his mortgage clients. Jeff, talk to us a little bit about your background in terms of marketing with mortgage companies, and then talk a little bit more about how you've been able to help your clients to leverage this niche.
Well, Dave, I spent 18 years doing direct mail marketing for mortgage companies, and the company that I was involved with actually sold, and I had a non-compete, so I couldn't sell direct mail advertising for 3 years, so I decided to enter into the mortgage business because I had so many of my clients doing so well off the marketing. I kind of learned how to do that and opened up a mortgage company, and within 5 years we built it up to doing about 120 loans a month, and I was spending, anywhere from $100,000 to $200,000 a month on direct mail, to bring in 1,000 phone calls a month to close 120 loans. So I've just got kind of a unique experience that, 17 years of doing direct mail for mortgage companies, and then actually being in the business for 7 years, spending my own money on direct mail and learning what lists worked and trying to match up a good list offer to whatever products were available at that time. So that's just a little bit of my background. Most of my life has been in, mortgage or direct mail or both. So.
You bet. Well, in terms of leads and generating great lists, I mean, you've got a unique strategy of how to go about that. And you've even said in previous webinars that, 60% of the response rate comes from the quality of the list. So talk to us a little bit more about how you're compiling high-quality lists of HARP candidates.
Well, with the Fannie Freddie data that's available out there, or should I say that's not available, Fannie and Freddie were buying loans in pools typically behind the scenes, so there's no recording on title that shows that, Fannie Mae owns this mortgage or Freddie Mac owns this mortgage. So what we've been able to do is go into the credit bureau data and pull out credit scores, certain scores, 620 and up with no mortgage rates, and actually identify which loans are owned by Fannie Mae and which ones are owned by Freddie Mac, and we've had a lot of success mailing this data. So you're right, 80% of the success of your direct mail campaign is all the list and the offer. So we put 60% weight on the list. You got to get your offer in front of the right people to get a good response and a good conversion, when these calls come in. So we've spent, since April of last year when this program came out, we've pulled millions of records and mailed millions of letters and kind of fine-tuned, the right loan dates, the right loan amounts, whether it's Fannie-owned, Freddie-owned, credit scores, no mortgage late. So we've got a couple different ways to go about, targeting the right people. A lot of people are just mass mailing, 10,000 homeowners with the right loan dates prior to May of '09, and just on accident, they're going to run into about 30% Fannie Mae-owned mortgages and 20% Freddie Mac. So half the data will be Fannie Freddie, but the other half is just a bunch of unwanted phone calls, people that are upside down on their house that really can't do anything. So we're able to really drill down and get the right data, or we can go with the cheaper data and get the 50% accuracy, targeting a lot of lenders that sold big portfolios to Fannie Mae, like SunTrust, B of A, Countrywide, Flagstar. We can target specific lenders that sold a big portfolio to Fannie Mae and get a little better than 50% accuracy. So that's just a little bit about the data.
Well, I have a poll up right now because I want you to be able to know who's on the webinar, and you can speak directly to the groups that are on the call in the webinar right now. So for those of you that have navigated away from your computer screen, if you can come back and cast your vote and tell us a little bit more about what you're doing with marketing. You don't have to do large direct mail marketing to make it work with HARP lending. But if you're interested in doing that, this particular webinar will help you to understand a little bit more about how Jeff's been successful with it. While that poll is up, I want to give you about 10 more seconds to do that. I want to throw it over to Michael Robinson with Everfirst and have Michael talk a little bit about, you're working with a lot of bankers and brokers out there that are submitting, HARP loans to your organization. Talk about what you're hearing from the field in terms of, they have a great product, they have a great system for generating HARP, but now they're just looking to leverage their time and the need for marketing. Is that what you're seeing out there, Michael?
Oh yeah. As you know, and the title of this webinar is definitely says it all. It takes both aspects of the effort to succeed. You have to not only find the customer, you have to be able to get the loan done. And when one of those is lacking, of course, you're not going to be successful in your efforts. I'm just really impressed with what Overflow Works brings to the table in the regard of finding customers, because they're out there. We all know that there are. HARP itself has been underutilized, and all the data suggests that there is a vast pool of potential customers out there that would do the HARP loan, that would fund the HARP mortgage, but they either don't know how to get it done, they don't know what's available to them, or in many cases they've been burned. They've applied and their loan application's gone into a black hole. And so the fact that Overflow Works can bring these customers to the table for the brokers that we fund loans for, and then we can actually get the deal done. I mean, it's a powerful combination. So we're really excited to be a part of it.
Well, and that's, one of the things that I wanted to make clear with today's webinar is that Overflow Works and Everfirst Home Loans are two totally separate companies. There's no shared in terms of income or earnings, and this is just simply an opportunity to come together in like a strategic alliance to be able to take the peanut butter and the chocolate and put them together, because Jeff is doing a fantastic job in marketing, and Everfirst is a proven winner in terms of underwriting and closing HARP loans. And Jeff, maybe talk a little bit about that as I close up the poll in 5 seconds. If you haven't voted, go ahead and cast your vote. But Jeff, talk a little bit more about the frustration that your clients have had in terms of getting a quality lender to actually, get the deals done. You've been able to make it rain in terms of incoming qualified calls, but they struggled with getting them placed in a place where they could actually get them through processing and underwriting in a fairly short period of time.
Yeah, it's been quite a ride for the last, 10 months since this HARP program, or HARP 2.0, came out, and watching all these lenders trying to get the business and then not be able to maybe, finish the business. I guess the biggest challenge is this Fannie Mae HARP program really doesn't have any overlays. It's unlimited LTV. It's a DU approved eligible or level 1, 2, 3. They all should be able to fund these loans, but all the lenders originally that came out started putting all these overlays. We want a 680 FICO. We won't do mortgage insurance transfers. We'll only do it if it's approved eligible, not level 1, 2, 3. So all these lenders kind of put all these overlays, and I think a lot of borrowers called to try to refinance into a HARP loan, and they just called the wrong lender. They didn't have, like Everfirst that's doing these loans, unlimited LTV, no overlays, MI transfers, expanded approval, level 1, 2s, 3s. So, this thing kind of went out with a bang, and then all these borrowers tried to refi, and a lot of my broker clients, weren't set up with the right lenders, or the lenders were taking 90 days to fund these loans. And I'm sure some of the people on the phone have been through the pain and agony of waiting 90 days. And, do they make 180-day rate locks? I mean, some of these lenders were making you lock loans for 90, 120 days because they knew how long they were going to take. So that, that was part of the frustration. But even throughout all that, a lot of my clients funded enough loans to continue to do the marketing and be profitable. But I think if they were hooked up with Everfirst or, doing these things with unlimited and no overlays, it would have been a lot smoother. And, a 30 or 45-day time frame to fund a loan, not 90 days and then have to rerun credit. I mean, that's some of what I've seen. There's been a lot of success with it, but a lot of frustration, and a lot of it comes back to who is funding these loans for you and what are their guidelines,
You bet. Well, I'm going ahead and showing the polling results. So most of the people are not spending a lot of money in marketing here, Jeff. So, obviously we want to keep it balanced for those people that are and those people that aren't. But, talk through a little bit more about the large county counts that you've actually shared with us on the webinar tonight or this afternoon, and just kind of walk through the numbers for those people that are on the webinar.
Yeah, so these counts we're showing on the screen are just some particular counties around the country that happen to have a lot of Fannie Mae-owned mortgages that are, loans sold to Fannie prior to May of 2009, 150,000 and higher loan amounts. And, this just shows what the opportunity is. I mean, everybody's pretty familiar with Phoenix, Arizona, so Maricopa County encompasses, Phoenix and Scottsdale, and there's still 155,000 Fannie Mae-owned mortgages in that county that qualify for HARP that haven't refinanced yet. Now, maybe 50,000 of them tried and didn't get through the system because they called their lender, or they called their credit union, or they did it with some broker that didn't have the right lenders in place to get them done. So we've been putting on a lot of our direct mail letters recently. Even if you've been turned down by your lender, I might be able to help you. Or even if you've been through this process before, call back because things have changed, and Fannie has lightened up some of the criteria inside of DU because we know a lot of these people tried and just didn't get done and got frustrated. But anyways, 155,000 people we can mail to, and just in Phoenix, 225,000 in Los Angeles. Again, these are 150 to 417 loan amounts. About 10% of our data has phone numbers on it. If somebody just wanted to buy a list with phone numbers, we can sell them a list if they're not ready to, spend the extra money on direct mail. So anyways, that's kind of some of the numbers we're showing here.
You bet. Well, let's jump in and talk a little bit more about the marketing pieces that you've done. And these are some samples that you've gotten approval from your clients to be able to share, and you actually created them for the clients, so it's really your marketing materials. But talk a little bit more about the strategy behind the letters. There's a specific question from David that's on the webinar who's saying that, he's, obviously got a great amount of response when he puts in a really low interest rate on an ARM, and he gets the phone to ring, but he's having a hard time getting them sold on a fixed rate product. So talk a little bit more about the strategy of the letter, and then maybe address the issue of, lowballing the rate quote and then just having people call in that aren't interested afterwards.
This mailer was, I'm thinking, is about 4 months old, back when rates were really 3.5%, and this lady with Academy Mortgage, her rates were a little bit high on her HARP program, so she actually advertised her rate 0.5% higher than what the market value was, advertising 4%. And I remember that we did our first mail drop of 2,500 pieces, and she got like 21 phone calls, and every single loan was Fannie Mae owned, so she ended up submitting 11 loans and funded a good percentage of those. Took her a little bit of time, and I think she had to broker them out. She couldn't do HARP at her own mortgage banking operation. This is a pretty big company, and they weren't offering HARP. So, she had a success on this letter. I mean, all of our letters just talk about refinance your mortgage, even if you're upside down. We like showing a mortgage amount with an attractive payment. I don't think you have to drop the rate down to 2.99 on a 5/1 ARM just to get the phone to ring. I mean, most of these people are paying, 5.5, 6.5, even 7% interest rates. So taking them down to 4 or 4.25 right now, there's still a pretty substantial savings, especially if it's a $250,000 to $350,000 loan amount. So we have, some little disclaimers that are on the mail piece that we're required to put on there from Fannie and Freddie if we mention their name on the letter. Loan amount, interest rate, phone number. I mean, pretty simple mail piece, and we've had a lot of success with this type of mailer.
That's great. We'll talk a little bit more about this other type of mailer that you have here. You've got a little different strategy to it, but a lot of disclosures at the bottom. Talk a little bit more about disclosures and when they're required and when you can minimize those, Jeff.
Well, this particular lender is licensed in like 15 states, so 80% of that disclosure is just listing all his license numbers, and we're mailing multiple states for him. He's located in Washington, but licensed in maybe 15 states in the Midwest and the West Coast. The disclaimer basically disclosing what type of loan it is, if we're advertising an interest rate, what the loan program is, and all the guidelines. I've done a lot of direct mail for very large mortgage companies and had their legal teams and their compliance department sign off on the letters. So, we've got compliant letters that we can, show you and that have been approved by some pretty large lenders out there.
You bet. Just a quick question from the participants is in terms of response rates, what can you expect on mailing out 5,000 letters, Jeff?
Well, when we mail out 5,000 letters to like an FHA or a VA list, we're getting anywhere from 0.5% to 1% response. So 25 to 50 calls on that type of a mailing. But depending on what area of the country we're mailing, I mean, we've seen a lot of customers get 2% response on a HARP mailing. I remember the first one I did, I mailed 2,500 letters to Phoenix, Arizona, and the guy got 86 phone calls. It was almost 4% response, but we don't like to quote that. It's been a little more saturated out there now. These people have heard of it and maybe gotten some mailers. And so I would say right now, to be conservative, I think we would quote a response rate around 1%. So 5,000 letters, they would get 50 phone calls and, hopefully close anywhere from 10 to 20% of those phone calls.
Yeah, and another question, Jeff, and if you want to walk through these case studies in correlation with this question, but what about targeting credit data? Can you actually isolate out people that have, zero mortgage rates? Can you target certain FICO scores?
Yeah, that's an option. I mean, there's only two places to get mortgage data. One is the title company's public records from the county recorder's office, and we have a lot of success with that data, even though sometimes it's a little dirty and, not 100% accurate. But it's been really good for a lot of our clients. Or we can go to the credit bureau and go get credit scores and no mortgage rates and, certain mortgage balances that are, 99% accurate out of the credit bureau. A little more expensive data, a little bit more compliance and longer disclaimer on the mailer, but that's all available.
Talk us through these case studies, Jeff, as we wrap up the marketing portion of this call and move on to more of the underwriting and lending side.
So, case studies, Orange County, California, this particular client said, Jeff, I only want to go after loans $300,000 and higher, and anytime we take our loan amounts from $150,000 up to $300,000, you're going to cut your response in half. So this guy got 42 phone calls on 5,000, a little less than 1%, but because he's targeting big loan amounts. So Salt Lake City, Utah, we've done these mailers all over the country and had, like I said, anywhere from 0.5% to maybe 2% response, averaging 1%, and just had a really good response in return. The main thing, though, is, like I said, is that they get signed up with a lender that can actually fund these loans in a decent turn time with decent rates and not all the overlays. And I'm excited to have Everfirst here presenting what they're doing, because they're one of the few lenders out there that I've seen actually do these things quickly and, without all the overlays.
You bet. Well, I have your contact information up here in terms of people want to reach out to you. We're going to email out everybody the resources that they need to get in contact with you. But anything as you wrap up the marketing portion of this webinar, Jeff, in terms of best practices or strategies on how to get the most incoming qualified candidates to call you?
I would say that the best thing somebody could do is really just set up a time to spend like 30 minutes with us on the phone, or maybe an hour, and let us go through. After we've mailed 2 million letters for 100 different clients in probably 35 states, we've learned some things about this Fannie Mae data, how they respond, the questions they ask when they call. We record a lot of phone calls and track it for our clients. So really, the more you put into this up front, the better. You can't really control the response rate so much, but you can certainly control, a lot more on the closing ratio and how you take these calls and what pitfalls you're going to run into and what's delaying them. And so I would just say, set some time aside and set up an actual conference call with us to walk you through everything we've learned. We're pretty open about, all the information and, that we've learned through the last year of doing these mailings for HARP, Fannie, Freddie, the FHA, and all the different campaigns that we do. So just set some time aside and spend some time with us on a conference call, and we'll walk you through all the counts for your state and all the different letters, and really, put some time into it so we have a better chance for success. And we want to get a customer that's going to mail every month with us, so we want to put a little more time in and kind of go from there.
Right. So you can call Jeff at 888-212-4343, and we're going to bring Jeff into the conversation here a little bit later, but we're going to transition the call to really speak on the topic of funding and actually getting deals done in a timely manner, and some of the pitfalls, and also some of the best practices and some of the little secrets, the insider information that help you to get deals done through a specific product or lender opportunity that Everfirst has to offer. So I have a poll up right now. I'd like everybody to cast their votes so we know exactly who's on the call, and we can kind of specify the conversation towards those people that are present with us today. So cast your vote in the next 10 seconds, and I'm going to have it thrown over to Mike Robinson. Mike, talk to us a little bit more. You're the division president for Everfirst Home Loans. So talk to us a little bit about where HARP is today, and a little bit about Everfirst Home Loans and their real desire to be a niche player with HARP.
Well, I'm assuming, and of course this poll may prove me wrong, but I'm assuming that most of those participants in the call today are somewhat familiar with HARP. And so we're probably not going to spend a whole lot of time reviewing the program itself. Suffice it to say that we're in the second generation of HARP now, and HARP 2.0 did open a lot of doors. And I know that probably many of you brokers that are with us today probably tried to capitalize on that. As a matter of fact, we know there was a great deal of enthusiasm. There was a rush to get a lot of HARP business funded under the HARP 2.0. that was announced in May of 2012. Unfortunately, there's also been just a tremendous amount of frustration. Frustration at what's already been alluded to is in the way of lender overlays, but also service levels. The service levels just have not been there. The turn times have been just extremely long, outrageous in many regards. I mean, as we go out and we meet with brokers and begin new relationships with brokers relating to the HARP business, we're amazed at some of the stories that we're hearing about how long it has taken to get deals done, and how long sometimes it has taken and the deal still doesn't get done. And so with that in mind, what HARP is able to do, and unfortunately the shortcomings that the industry has had in accommodating that business, I really just want to tell you a little bit about Everfirst, what our philosophy is, and what we're trying to accomplish as far as it relates to HARP. Jeff took some time telling us how to get customers. We want to take some time showing you how, once you get that customer, how to satisfy that customer, and make some money on those loans, get those loans funded. I really kind of want to just, Everfirst. First of all, let me just say that Everfirst is committed to the HARP product. The fact that we don't have any overlays speaks volumes to our commitment to HARP. We take HARP for what it is, how it was designed, how it was envisioned. We take what it allows us to do, and we don't get in the way of that. And so we use HARP as a vehicle, just as you as a broker can and should be using it as a vehicle to build business, to fund more loans. And it's become a key part of our initiation of new broker relationships. And so the HARP program is not a peripheral product to us. It is an important part of what we offer, and it's not a lesser program by any means. Of course, we're a A to Z lender, and we can do all kinds of things for you. The focus today is on HARP, and if you just give us your HARP business in the interim, and over time we build a relationship and we do more business, that's wonderful. But we're certainly not going to be pressuring you to give us anything but HARP at this point, and we welcome that business. We do have a stable.
In the polls, Michael. Right now we have, about 47% of the people are still learning about HARP, and then we've got 35% that are very familiar, with about 19% that are still getting familiar. So just give us kind of a high-level overview on HARP as we walk through some of these slides that you presented, and
sure.
You can talk a little bit more about what you're seeing in terms of the real-life in-market type of stuff.
Sure. Well, I mean, as far as what HARP is concerned, again, it's probably remedial in nature to go over that. I think most people understand that the Obama administration rolled it out, what the purpose of it was. Obviously, there's a lot of homeowners that are underwater and with their mortgages, and it's designed to accommodate that and to alleviate those concerns. It was announced in May of 2012. Fannie Mae, the 2.0 version was announced in May of 2012, and the Fannie Mae version, or the HARP in its incarnation, in its 2.0 incarnation, allows for unlimited LTVs, and that's a big area where we're different than a lot of these other lenders, in that we don't have a maximum LTV, we don't have other overlays. Fannie Mae removed the ceiling of 125% LTV when 2.0 was announced, but unfortunately many lenders didn't remove that as far as an overlay was concerned, and so that's a big area where we're different.
Talk about overlays for just a moment.
Because some people clearly there. I was kind of hearing a little bit of coming in and out there.
Yeah, I heard them okay. I think that it may be a mixed communication on that, Jeff. But Michael, talk a little bit more about overlays in general and how those are working in the lender environment, because we've had other lenders that have told our webinar participants that they don't have any overlays, and then before long they all of a sudden start throwing on overlays. So talk a little bit more about Everfirst's position on overlays.
Hey, Dave, are you there? This is Jeff. Are you there?
Yeah. Can you hear okay?
Yeah, I'm getting a lot of feedback, and I don't know if everybody on the call is hearing every other word like I am, but I just wanted to bring up that maybe if we're on the VoIP phone lines, we're getting a little bit of cutting in and out, it sounds like. Just want to make sure everybody in the audience can hear everybody clearly, because I'm hearing every other word. Maybe it's just me, though.
I think that it's just your line right now. Great.
We hope so.
Okay. Talk to us a little bit more about overlays and how that's working in the market.
Well, I mean, overlays in general are lenders initiate overlays to mitigate risk, and I mean, you know, HARP is perceived by many lenders to be a risky proposition, and it isn't without risks. We know this. We have designed our HARP offering in a way, the program that we offer, in a way that mitigates that risk, and we're very comfortable with the way that it's priced and what we're bringing to the table, and overlays just don't come into play on the program. We take HARP for what it is, and it's just a difference in philosophy, I believe. I mean, I'm certainly not here to knock overlays. They're necessary, and different lenders will institute them as a means of mitigating risk over time. That certainly has not been the case on the HARP with us, and we're not envisioning that it will be the case moving forward.
Great. Well, talk to us a little bit more about some of the things you're seeing out there in the market as you and Rick are out there, you know, getting belly to belly with the brokers that are out there. What are you hearing in terms of what's working, what's not working, best practices, anything you can share with the participants today?
Rick, do you want to take that?
Yeah, sure. The overlays themselves do create a fair amount of frustration in getting your loans closed. And we've seen the loan-to-value restriction. You know, we're told by our broker partners that that has been a big sticking point in a lot of their deals. Also, the fact that Fannie Mae doesn't have a minimum credit score. We're a direct seller, and we do the Fannie Mae HARP exactly as it was designed, where if it is approve eligible or even one of the levels, 1, 2, or 3, that has that in and of itself we take as a risk mitigation. If it works and is approved as approve eligible or one of the levels, then the credit is doable. Obviously, we can't have any mortgage lates within the last 6 months, nor have any. We can only have 1 times 30 in the last 12 months, but that's a Fannie guideline, and as long as we stick to that, we feel the credit has been mitigated. It's what the program was designed for. That in and of itself can save a whole lot of deals that aren't being done elsewhere, because a lot of times they'll have the lender will say, okay, well, you're telling me we have a borrower that's upside down and we'll do a 580 score. They think that's way too much risk for them. But we see it as part and parcel of the product that we are offering. We're using HARP to double our business in 2013. We've funded $1 billion in loans last year in 2012, and we will continue to fund $1 billion loans of the regular variety. It is our goal to fund $1 billion in HARP loans in 2013, and it's a means to an end to grow our customer base. We want to have we want to introduce ourselves to brokers across the country and show them what we can do on HARP. And if we can do that on HARP, we certainly can do that on the rest of the programs that we have in our arsenal, in our quiver, if you will. But the overlays themselves create a huge opportunity. The fact that we don't have them, the fact that they exist gives us and you, because you have access to us and our funding platform, it gives us both a huge marketing advantage in the marketplace. I mean, if the overlays didn't exist, we'd be just like everybody else. But the overlays do exist, and because we don't have them, that gives us a huge advantage. We can go after HARP, and we can develop a marketing mailer that's designed for credit scores below 640, and we can mark it with a letter that basically says that if you've been turned down for HARP, please call, because we have expanded programs that allow us to take a second look at what you've already tried to do, and we can likely help you. So the fact that the overlays exist in the marketplace creates a huge marketing advantage for us. And then the other thing is that we have the staff in place and the knowledge in place that our service level proposition is second to none. I mean, we are doing HARP loans in 3 weeks. I mean, we're quoting a month to 6 weeks, because we know that with adding some brokers in this initial push in these limited states that we're offering to bring on new brokers for this product, we know that our volumes are going to increase, and we've already staffed for that. And so the month to 6 week turn time is in anticipation of growing our volumes. So we've already taken that into consideration.
What I like
One of the
what
things
you're saying, Rick, is you're really kind of positioning brokers to be almost first to market on some of these lending guidelines. And so, obviously the proof is in the pudding. They're going to have to fund the loans through you to really understand that service proposition that you're suggesting right now. But what you're giving them is something that is a superior niche play. And, by leveraging Overflow Works and the direct mail strategies, they could actually go out there and capture a large amount of HARP clientele that's maybe been turned down or not gotten a loan from somebody else. So that's fantastic.
Yes, and I mean, it is a great feeling. Our brokers tell us it's a great feeling to have a product that people aren't rate shopping, because they know that they're dealing with you, and they know that you're the only player that is talking to them. And we have a lot of product that we do that is the only game in town. They're so happy to be talking to someone that doesn't say, "Oh, I'm sorry, I can't help you with that credit score." So that is a unique thing. And then the other thing that makes it really unique, that we capture more of these borrowers and we can close more of them, is the fact that we do the MI transfer. There aren't a lot of lenders that do the MI transfer. And if they do it, they may limit it to a couple of MI companies. Well, we do any MI company, we will transfer the MI. Now that may, with some of these companies, some of them gone out of business, and they obviously they have premiums that they keep collecting, and so they're regulated to where they have to have a staff that handles their current premiums, their current policies that are in place. If there is mortgage insurance that's been written on a home, there are service people in place to do the transfers. They're regulated to do so. We transfer all MI company policies, and some of the more obscure ones, they may take a little bit longer. The 6 weeks to maybe even 2 months to get them to transfer it may be something we have to quote to our borrower, depending on, maybe Triad was the mortgage insurance company, and so it may take a little bit longer to do. But we will transfer all mortgage insurance, and that's something that is unique.
That is another great example of how you're able to help them to go out to the market and really blow things up in terms of their business opportunities. And it sounds like you guys are ready to blow things up on your end too. So, it's really just going to be that opportunity where they're going to have to get that first loan to you. And talk a little bit more about licensing requirements. And we'll get to, I'll go ahead and bring that up right now, because there's quite a few questions coming in. They're really eager to learn a little bit more about how to partner with Everfirst. So talk a little bit more about licensing with Everfirst.
You mean becoming an approved broker with us?
Correct. So I'm going to go ahead and show the slide now that talks a little bit more about where you get status, and then if you could talk a little bit more about some of the licensed states that they already can submit packages from.
Great. I'm going to go ahead and turn this. I'm going to turn it over to Michael, who's the division president, and he's going to field those questions.
Great, Michael.
Well, I see the slides up here. This is home. Springfield, Missouri is our home. That's where we're at now. I saw a slide earlier that discussed our relationship with Mortgage Solutions of Colorado, DBA Mortgage Solutions Financial. That's actually we are a division of Mortgage Solutions out of Colorado Springs.
but our division headquarters is in Springfield, Missouri, so we're in the middle of the ice storm, the ice right now. And we're just starting to dig out. Probably a lot of you have had similar experiences. I hope you're faring okay. This slide here shows the 23 states where Mortgage Solutions is licensed, and by extension, Everfirst Home Loans. Any of these states are states where we can fund loans for the brokers that are approved with us. We do have a focus at the moment, however, as the next slide will illustrate, of areas where we are actively taking on new brokers in the Everfirst division. These states are highlighted in red. If you see your state, that's great. If not, we'd still like to hear from you, especially if you're in one of these other states that are highlighted in green on this slide. We would definitely like to hear from you. It's not our focus. It's not where we're taking on new brokers at the present moment. Rick already talked to you about the need to phase things and to focus so that we can maintain our service levels and we're not inundated with so much business that everybody suffers. That's part of what we're trying to accomplish here by phasing things and by focusing on certain states. But if you happen to be in a state that's not focused here, that's not featured here, we definitely want to hear from you, and we will definitely be in contact with you. One of the states that's not featured or not shown here is Florida. That's the state that will be coming online very soon. So if you're in Florida, we definitely want to hear from you. That's another state where we'll be looking to do some business as well. As far as getting approved with us, go ahead.
Talk a little bit more about that approval process. So if they've got some deals that they want to get submitted over to Everfirst, and they're in one of the states that you're approved in, or they're in a position where they're a major player in HARP, they're already doing HARP, but they like the idea about doing more with some of these niche plays that you've talked about with no overlays. What would that process look like in terms of getting set up with you?
It's a very, very simple process. It's a pretty standard broker approval process. It only takes a few days. There's nothing too awful scary about that process at all. If you would like to consider Everfirst as a strategic partner, if you'd like us to be able to fund your loans, just make it known to us, and we'll definitely reach out to you. We'll get an account executive in contact with you who can give you the necessary package so that you can fill it out and get approved with us. But again, it's really fairly easy, and it only takes a matter of a couple of days to get approved.
Well, we've got some great questions here, and so I'm going to go ahead and just go ahead and facilitate those Q&As right now because there's so many of them. I'd like to get through as many of them as possible. Is that okay, Michael?
Yeah, absolutely.
Great. Well, let's throw these questions out. So let's just talk. And this may be where you have to throw it back over to Rick, but level 1, 2s, and 3s. Talk about that. Talk about non-owner occupied properties. There's a lot of specific questions coming in there, but is there any overarching guidelines that you can share with them so that they know a little bit more about what you can do and what you can't do?
I think I will throw that to Rick. Rick?
Well, good. I just want everyone to know I am an underwriter by training, but I've recently been promoted to sales, so I'm with the rest of you guys. The underwriting guidelines as they are to EAs 1, 2s, and 3s is the same, no overlay approach. So obviously we need a DU approval or a DO approval to do the HARP, but it doesn't have to be an approve eligible. So obviously the EA3 is going to approve a lot more borrowers on an EA3 than it will on an approve eligible. So that kind of speaks for itself. No added overlays, no added price. So in other words, if we do the HARP, we price it the same to an approve eligible as an EA3. The non-owner occupied, that's a great niche to be in because a lot of the lenders don't do the non-owner occupied. It could have originally been a non-owner occupied. It could have been done as a primary residence, and now they want to refinance it as a non-owner occupied. That's fine. You can add or remove a borrower.
Hey, hold on just one second, Rick. I want to bring Jeff back in if his phone is working okay. Jeff, are you still there?
Yeah, I'm here.
Hey, would you talk a little bit, Mel? Because I know that you just did a pretty successful non-owner occupied HARP mailing, didn't you?
Yeah, I've had a lot of success marketing to some non-owner HARPs recently, like 2% response instead of 1%. A little tougher borrowers to deal with, pretty sophisticated tax returns and that, but a lot of calls and a lot of loans. So
that's great. So you do have a specific strategy. So if you want to leverage that particular niche with Everfirst, but Rick, go ahead and follow up to that non-owner occupied properties and any other additional information you want to provide on that. Rick, are you still there? We lost Rick.
I can jump in. We must have lost Rick. This is Michael. I can jump in on that if you'd like.
Yeah. Talk a little bit more about the non-owners, and then there's a couple of questions in regards to 30-year to 15 or 20-year on a HARP refinance. This is maybe a more specific question, but can you guys do that?
Well, I can definitely. As a matter of fact, Rick, we're in the same office building. Rick must have lost his connection because he's coming in to be with me. So I'm going to have Rick. Address that now. Go ahead with the HARP.
Yeah, I don't know the specific question that was asked because I just lost my connection. But
non-owner occupied, and then
what's great about them.
Go ahead.
The non-owner occupied is great with us because the HARP, how a regular guideline would be that a borrower could only have 4 mortgaged properties. Then there is a special product that you can have 5 to 10 properties if you have a 720 score and the reserve requirements that you meet, that you could do up to 10. You could do a non-owner occupied loan even if the borrower had up to 10. On HARP, there's no limit, so the borrower could have 20 or 50 mortgaged properties, and you can still do the HARP loan. Okay, that's certainly something that no one that I know of offers. So, when you're talking about Jeff doing a successful mailer and gets a response rate, we're talking about a potential repeat customer as well as the one they're calling on. They might have 3 or 4 or 5 or 6 properties. They might have their own home. So a 2% response rate, and then couple that with the chances that they have multiple properties that they could utilize your services for, HARP or otherwise, is a great thing. So
I'm going to have you take a break just a moment there. I have a poll up, and I'd like to have everybody cast their vote. Obviously, we don't want to have Everfirst, contacting people that do not want more information. So if you do want more information or you have a preference about how you're contacted, please cast your vote. I'll close that poll up in about 5 seconds. And I'd like to have you talk a little bit about pricing. There's some questions coming in about how the pricing is with Everfirst and how competitive you are in the market.
Well, that's kind of an individual question. If you want a rate sheet, we'll get with you. I mean, when we say that we are competitive, that's what we feel we are. We're competitive. Because we have no overlays and we can do more loans, we probably are a little bit higher priced than maybe some that are more restrictive and are more targeted on higher credit score borrowers and the like. But again, we're not out of the market. We have regular Fannie hits for credit score, although we'll do the credit scores that nobody else will do. So that's really the advantage there, is that most of the borrowers that if you target it towards the lower scores, there won't be any competition.
Well, I've got another quick question, and I want to throw it back over to Jeff. Freddie Mac loan candidates, what are you looking at in terms of Freddie? I know that that's an opportunity that's out there, but how would you address the question of doing Freddie Mac HARP loans?
Well, our experience is about 35% of the mortgages out there are Fannie Mae owned, and about 15% are Freddie Mac owned. So there's a lot less data out there, and I've had clients mail to both, and they always come back saying, hey, Fannie's a lot easier to work with. They're approving our deals, and Freddie's still kind of up and down. We've got 750 FICO, borrowers got $100,000 in the bank,
and Freddie still won't approve it, and we don't know exactly why. We've heard that they're going to lighten up, and we're going to have more success getting approvals on those. But right now, 90% of my clients are all just marketing to Fannie Mae owned mortgages, and there's a lot more of those out there to mail to. So, we can do both, and some of my clients, have had success with Freddie, but from what I hear, the Fannie DU approvals are just coming a lot easier than LP and the Freddie Mac loans. So.
And Rick, right now you guys are only doing Fannie Mae. Do you guys have any intentions of offering Freddie Mac HARP refinances?
We do not right now, but we may open them up if they prove more, if they loosen up their guidelines a little bit on what they're approving on the LP. Here's the reason why we only do Fannie Mae, is because of our service level proposition. If we were to gum up the works with a bunch of Freddie files that aren't going to be approved at the same rate as the Fannie files, we wouldn't be able to offer the same service that we will on these Fannie. So what we've done is we've chosen the low-hanging fruit, the Fannie, which is more apt to be approved, and that's what we're specializing in.
Great. How about any restrictions on LO compensation, and what are the LO approved ranges with Everfirst? Is that something you could share on this call?
Yeah, there are restrictions on LO compensation, but I guess we do impose them because we have a max. Our maximum is 103, so we'll offer a 3 broker comp. But we find that a lot of people don't think that a 3 works in the marketplace because they want to be more competitive. Again, we would encourage people to try a more liberal comp package, because again, if you pick a mailer, for example, that is marketed towards lower scores, you won't be the 103 is going to be attainable, and you're not going to be shopped a lot because you'll be the people listening to them and helping them when they haven't received that kind of service in the past.
Jeff, what about cost per funded loan? What are you seeing out there with working with your clients on HARP? What are they allocating for a marketing cost on each transaction?
Well, one of the biggest clients I ever worked with in my lifetime used to own Dytech Mortgage, and now he owns Cash Call Mortgage. And last month, they funded 5,000 loans for over $1 billion in loan volume in January, 1 month. And I talked to somebody that works in the marketing department and found out they spent $5 million on marketing last month. So real quickly to do the math, that's $1,000 a loan to fund a loan, in marketing costs. And then obviously paying a loan officer commissions and then whatever's left for the manager owner. And what's funny about that is in California, I just had a mortgage broker spend $5,000 with me, and he funded exactly 5 loans, $1,000 a loan. So what I'd like to tell clients is some states, like in the Midwest and the Northeast, I'm still funding loans for $500 a loan off direct mail marketing. But in California, that cost is a little over $1,000, but the loan amounts in California are, $280,000, and the loan amounts in the Midwest are $140,000. So it's kind of all relative, A good way that I like to tell clients to look at it is, hey, if it costs you 50 basis points to fund a loan off marketing, can you still pay a commission and still make good money? A $100,000 loan I can bring in for $500. $200,000 loan, $1,000. $300,000 loan, $1,500. So if we figure an average loan amount of $200,000, that's exactly $1,000 a loan, 50 basis points. I think that's a great way to look at it, and hopefully we can do better than that. But that's kind of the average out there nationwide.
That's great. Well, any final comments, Mike Robinson, before we wrap up, in terms of just encouraging those webinar participants to reach out to you? I've got yours and Jeff's contact information. But any final words before we wrap up today?
Well, hey, Dave, I just want to thank you for making this webinar possible. We appreciate the opportunity to participate. I want to thank Jeff for all the good things you're doing to help brokers be profitable. We definitely look forward to doing more business with our mutual broker clientele and all the brokers that participated. I appreciate you taking time today to hear us, and We look forward to hearing from you. We stand ready to help you to be more successful. So we look forward to hearing from you.
Great. Well, thank you, Michael and Rick Robinson from Everfirst, and thank you to Jeff Bush from Overflow Works Marketing. Please feel free to contact the information that's on your screen. Otherwise, we will provide the feedback resources in an email follow-up to everybody that registered to attend this webinar, and with a link to the recording as well. So we wish you all the very best this Friday afternoon, and have the greatest HARP year ever in 2013. Have a great day, everybody.